What's your thoughts on, let's say, ETH first and then the rest of the altcoins?
So yeah, I think ETH can go to 10,000 easily by the end of the year. I think Tom Lee is doing, you know, Satoshi's work, going out there and proselytizing the unwashed masses about the bright future of Ethereum as held by the BitMine digital asset treasury company. So, you know, he's red pilling an entire cohort of investors, which is great. I hope they keep buying stuff. But at the end of the day, right, the ETH story, ETH is still massively underperformed, given where a lot of other layer ones have been this cycle, and I think it's going to play catch up. I still like the price chart and fundamentals of Ethereum doing 10,000 by the end of the year.
I also like the sounds of that. Now, what's hard is right now there is loud voices on both sides because, and a big reason there's loud voices on both sides is the 4-year cycle, which doesn't have a ton of cycles to make it necessarily statistically significant. But for better or for worse, everybody in crypto loves to talk about the 4-year cycle. If that played out, then we would peak in Q4. Some people saying the top is already in. What's your thoughts on the 4-year cycle? So you think we're going to do well through the rest of this year, but how do you think the rest of this cycle plays out, and any view on how long it goes and when you might be able to see the top? I know the top is very difficult to predict, but are you believing that it goes into late 2026, 2027 even? What's your thoughts?
Yeah, so every 4-year cycle, and there's been 3, right, since Bitcoin's been created, have coincided with a change in price of money, quantity of money in the US and China. And that was a chart study that I did in my Long Live the King essay. So if we come to this particular situation and if we were adherents to the 4-year cycle, then we would say, okay, well, this cycle is essentially a derivative of the depletion of the reverse repo program at the Fed, which is $2.5 trillion. Started with Bad Girl Yellen in 2022, ending with Buffalo Bill Besant basically now. It's basically at zero. And so if you were in this 4-year cycle, like, okay, cool. Like, there's no more liquidity. That's empty. Where are they going to get all this new money to pump up the markets? Let's examine what is happening right now. So the Fed is cutting rates, and Powell said last night there are more cuts to come, right? And this is while inflation is above their target. The U.S. is printing 3+% real GDP. Unemployment is at historic lows for the United States at a post-World War II scenario, yet they're cutting rates. Okay. Inflation flying my ass. And then he said, quantitative tightening is done. Motherfucker, you printed $5 trillion over the last 5 years, and you've reduced maybe the balance sheet by what? 2 trillion, something like that?
Not
I don't know what
five.
the number is. Not 5. So what are we talking about here? It is not time for quantity. Your balance sheet should be 0. Talk to you when you're at 0, not when you're at whatever it is, 4 trillion, 5 trillion, whatever the Fed balance sheet is. So again, stopping quantitative tightening, quantitative easing is right around the corner. On the bank credit side, this is something that Besant has been badgering on about, that take away money creation from the Fed, put it in the hands of the commercial banks. JP Morgan announced recently a $1.5 trillion initiative. Most of that $1 trillion is based on, we will lend more to American industry. Basically, let's help Trump drop more bombs. So we're going to build some more bombs. We're going to help you build some more bombs by lending some more money, right? So if Jamie Dimon's doing it, then Bank of America is going to do it, Wells Fargo is going to do it, Citibank's going to do it, because they're all lemmings. Jamie Dimon is a leader of all the large U.S. banks. So they're going to create more credit. So we have the Fed and the banking system forecasted to create credit. We have Trump talking about a housing emergency, wants to unlock, I think there's something like 10 trillion of home equity based on house price appreciation in the U.S. What is he going to do? He's going to convince the American public to spend their housing credit card on more gadgets, is essentially the game. So they feel good about themselves. Cool, whatever. Again, more money printing, more nominal GDP growth, more inflation. And if we move over to China, what's the message from China? It's, a reflationary story. They think that they want to be able to do it in a better way, not go crazy like 2008 and 2015. We'll see how she does that. But at the end of the day, they're signaling support for the housing market. It'll be tepid support. support for social programs, and essentially reducing supply of goods, rationalizing supplies to get prices to go up. Again, this is reflationary. This is more credit being created in China. So, if the two major parts of the world forecasted to create more credit, and this is what's coming out of the bankers and the politicians' mouths. We move over to Japan. I can't pronounce her name correctly, but the new prime minister in waiting is an Abenomics fanatic. She wants to print more money, tell the BOJ stop hiking rates, and that's how she's going to combat inflation. You're just going to hand out checks to people. Again, doesn't work, doesn't matter. More yen being created. And then if we move over to the European Union, if we take a look at how I forgot his name, the prime minister who left, then was reappointed. To get his budget through, he essentially had to throw out the pension reforms that Macron almost died on a political cross of a few years ago with a Gilets jaunes pseudo revolution. Mm-hmm. He said, "Oh no more. We're going to scrap those age restrictions." I forgot what it was. I think they reduced it by 2 years or something like that. So printing more money. And this is France. They're so fucked. I wrote an essay called Bastille Day about how fucked their finances are. And they're going back on previous promises to sort of rectify the situation because nobody wants to go into austerity. Everyone wants to print more money. So we talk about the 4 largest economic blocks in the world. The politicians are telling us they're going to print more money. The banks are telling us they're going to lend more money to whatever it is the industries are that the politicians want them to lend to. This is inflationary. This is not like the other 3 cycles where you had credit contracting, you had the price of money rising, you had people talking about inflationary problems. So again, this is why I think the 4-year cycle is not applicable in this particular situation. How long do I think it going? I think we top somewhere in 2027. And the catalyst for that is the rhetoric coming from Team Blue Democrat in the United States and any opposition party around the world, basically like, oh, we have to do something about this inflation. Now, they're never going to do anything about it, but they're politicians. They have to campaign on the other side and get people to vote for them. And so the other position to take is, oh, they're printing all this money. That's why your grocery bill is up 30%, but your wages are only up 10%, all valid points. And that's what's going to scare investors. Oh, maybe they're serious about it this time. Maybe they are going to do austerity. Maybe they are going to try to rectify this fiat debasement scheme. And that doubt will lead to a correction in the markets
in 2027.
That's my mental model. I'll update it as frequently as words come out of my mouth, but that's how I'm looking at it.
Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. Yeah, of course. What worries you?
Global war.
Anything
war
keep
is
you up?
How
worried are you about the current status of the?
Well, I mean, there's nothing I can do about it. There's nothing I can do about it. So you know that the risk exists. If I need to go Mad Max and start killing motherfuckers to survive, I'm ready. But I hope we don't have to get there.
Everybody listening is like, I hope I don't end up in the same room as Arthur if it's Mad Max.
You better hope so, because I'm going to eat. So don't worry about that.
Everybody is now terrified. So here's the thing: global war, like that feels like you said, out of your control, right? And I guess anything that worries you is going to be out of your control. Anything, I think the thing that everybody sits in the back of every investor's mind is, the classic, I don't want to ride into the next bear market, right? I don't want to round trip. A lot of people in the space have round trip before. They don't want to round trip again. But then at the same time, impossible to predict the top. Let's say your thesis plays out. Do we have another bear market similar to the past, where we have big big drop-offs, what is the next bear market? Are we in a totally different regime where the bear market could last longer? How do you think about the next bear market whenever that does come? And does thinking about that help you prep, or is it more just like you're like, it's so far away, I don't even need to plan for it right now?
So obviously, I operate a barbell portfolio construction strategy. So to assuage that concern, you need to have the best brakes on your investment car. And so, I've talked a lot about, there's a fund that I invest in run by this guy named David Dredge called Convex Asia. It's probably, the smartest derivatives trader I've ever met. And not to say that you should invest in this fund. I'm just putting this out there as how I conceptualize this, right? So what is the trade that everyone, whether you're in TradFi, whether you're in crypto, we're all in the same trade. The trade is politicians do not want to inflict austerity pain on their populace. Therefore, any sign of recession or any wobble in the financial markets and these fractionalized leveraged financial markets, and every single country runs the same system, regardless whether they're communist or capitalist or whatever, they're going to print money. And because I believe they're going to print money, I want to own government bonds, stocks, real estate, crypto, whatever, right? Depending on your own worldview and how you've been educated, and you believe in one of these or a combination of these asset classes. So we're all in the same trade. We all believe the same thing. We're just choosing a different horse to ride into the future. Now, what is the thing that would obviate this trade or would cause this hypothesis to be false? If politicians said, okay, we're going to allow credit destruction. If you're over levered and you can't service your debts because the cash flows are not there, bank, financial institution, industrial company, and you got to fire half your workforce, you got to hand over the keys to the creditors, and you no longer produce them of cars or bullets or whatever. I don't care. Free markets, creative destruction, all that kind of stuff, like 1930s style situation, Great Depression. We allow credit to contract 50, 60%, whatever. We remove all this waste out of the global economy. Then I would say, okay, well then I've got a problem, right? Because crypto, gold, all this stuff's going to go down in value in fiat terms because of all the credit destroyed, right? The denominator is going to get smaller, right? So what do I own on the other side of my portfolio that benefits from the systemic collapse and them not printing money? And that's essentially what I own in this other hedge fund, are esoteric volatility bets that I can never do myself because I don't have access to these things. This is what they do. The fund loses money pretty much every year, but I don't care because I'm making so much money on my other side. So because I'm protected on this risk-off scenario austerity and how much money I'm going to make on over here, I don't have to worry about it. I just go, as back up the fucking truck, buy all the crypto, buy all the gold, buy all the equities, buy all the bonds, whatever the fuck you want to buy. Because I know that if the politicians do the thing that I never thought they'd ever do, which is austerity, then all these other things that I'm buying over here are going to go up 10x.
Yeah.
And I'll make back the money that I lost on this other side of the portfolio. Now, unfortunately, the crypto's gone up so much that I can't buy enough of this other fund with the available cash that I have. But I'm not, whatever, I'm not worried.
Yeah. So even though you don't believe any politician could ever do austerity, you are prepared for the possibility that could happen by investing in this fund. Is this a private fund?
Correct.
Could anybody invest in this fund? Or
I think it's a minimum $100,000 check, or I don't know. It's a minimum. It's for professional investors and all that kind of stuff because they invest in some very funky stuff.
Interesting, very interesting.
But again, as a regular investor, you could buy. I think they're very expensive. Puts on the S&P, puts on whatever your favorite indices are. If you don't have the capital for that, then you just have to be a little bit very, very thoughtful. Like, okay, listen to what the politicians and the bankers are telling you. And usually at the top of every cycle, their tune changes. They start becoming and worrying about inflation or, whatever it is. And then it's like, okay, well, the zeitgeist is changing. Therefore, I should change my portfolio and, find something else to own. So you have to listen to what they're saying. There is no such thing as a safe investment, set it and forget it, all this kind of stuff, right? Mm-hmm. It's your capital. You should take responsibility for it. That's the whole point of this journey. And, be cognizant of that and make adjustments.
Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.